Hi, I'm Dave Harmon. I'm with my partner Keith Cook, and we're with RE/MAX Whatcom County. And today we're just going to go over cash out refinancing and home equity loans. And I guess the question I have, Keith, is if you have a house and you have some equity in it, what's my options to maybe get some seed money to do maybe some other investing in real estate or repairs, or what's the route someone would take on that?
Great question, Mr. Harmon. It does make sense. We're kind of going over a few of these. We just filmed another video on owner contracts and financing. So it's important to understand like how to tap into some cash. Because if there's some good deals out there, how are you going to tap into that money? So I think most people, if you already own a home, there's going to be two ways to get some cash back. And if you watch another one, there's a way actually we can get you cash back on buying a home too. Right. So there's a lot of different creative ways, but this is, I guess it's assuming that someone has a home and they have some equity in it. And that just depends on what they want to use the money for. So if they're going to use it more long-term or short-term, or if they want something revolving. So just like the regular conventional loan, when you borrow against a property, they're going to look at the loan to value ratio of how much is the home worth and how much will they lend you on it. So your equity position is really different from what they'll lend you on it. So usually lenders would lend up to, say, 80% of the value. So the loan to value. So you've been in your house a little while, it's appreciated. And now all of a sudden, let's just make it easy math, that you owe $50,000 on your property and it's worth $100,000. So they will, if you want to do a home equity line or a cash out refinance, if you do a refinance, and actually there's kind of a second one or a second. So there's really three we're looking at. So a cash out refinance would be where you would go in and you're looking to renegotiate your interest rate. So for some reason you have a higher interest rate, and this may be part of the reason you'd like to do it, is adjust your interest rate and get some cash back. So say you're at 8% interest, you go in and you refinance the whole property at 6% interest, and you finance it the $50,000, you pay that off and you borrow $80,000. So you're borrowing a new $80,000 loan, they pay your $50,000 off, you get to keep $30,000, so you just did a cash back refinance. That works similar to the other ones too, where you would take a second, and instead of, let's just say your interest rate on your first is at 4%, and you want to keep that 4% interest. So you might just go and say, I want to take a secondary mortgage, same numbers, you owe 50, you want to get it up to 80, then you just borrow the 30,000, but that's placed in the secondary position. They give you the 30,000 all one lump sum, and you continue to make payments on that, and go buy what you want to buy. That works in some cases. In some cases, people may want a little bit more flexibility. And the one I like is the home equity line of credit, or the HELOC. Same scenarios where you go in and you're getting a second mortgage. So you're not going to refinance the first, you're getting a second mortgage, and you qualify, it's appraisal, everything's treated. And you have, at the end of the day, a $30,000 line of credit. So they're going to lend up to the $80,000, and they give you $30,000. At closing, you don't even have to take the money. You can take the money later. Sometimes they may want you to take $1,000 or $2,000 just to have it seed money, just so it actually gets the process started. You can pay that back right away. The huge advantage, in my mind, to the home equity line of credit is once you borrow the money, you can pay it back. So you want to go on vacation, you need to take $5,000 out. So you just call the bank, they transfer the money right over to your account. You now have $5,000 in your checking account. Say you went to Vegas and you did really good in Vegas. So you're now you're thinking you want to pay it off. So you can pay it right back as soon as you want, and then still go back to that $30,000.
Yeah, I think it works good. And the fact too is, some people will do it and use the money maybe to remodel their kitchen or do some home upgrades. But we see it with people, even with the HELOCs and stuff, where they'll use it, and it allows them as an investor to be able to be like a cash buyer and be able to go in and use their HELOC money to pay cash for maybe an investment property that they can, down the road, they can just refinance into something, and it just makes the process a little bit easier for them to get into an investment.
Absolutely, or a down payment. So most homes are obviously going to have a higher loan than $50,000 and a value than $100,000. So if you have a line of credit that's a couple $100,000, we say you want to buy a rental house for $600,000, you can put 20% down. That's only 120 grand. So you've just taken some equity out of your home, and now it obviously needs to make sense to pencil for what you're looking to do. But if you found a good deal, you're in a position to go purchase that property. And the day to start a HELOC, in my mind, is today. There's not really a reason to wait. You're going to be looking at the interest rates. It'll be based really off of prime. But so just assuming that the rates go up or down, and that you just want to have the ability to get some money, because the work you do right now, say it takes a month to get your HELOC all dialed in, you could be set for the next 10 years. At any time you want to go in and just borrow some money, you're ready to go. Because if all of a sudden a great opportunity came up, you might miss out on it because you have more legwork to do right now. So we don't get paid from HELOCs. I just think it makes sense for everyone to be, ready, willing, and able to go on a property or an investment or a vacation or whatever, a kitchen remodel. Life's stressful. It's nice to have this ability to borrow that money. Some people may look at traditionally like, oh, just, cash advance, a credit card or something like that. Well, this is a lot safer, a lot better interest rate, and it's a lot more available too, because you can get a couple $100,000 on a HELOC. Most credit cards, I think, are going to cap out around 20 or so.
Right. Yeah, and I don't think people are aware that there are, the multiple options of being able to tap into that equity, and especially on the HELOC, not having to pay on it unless you use it. Because obviously if you refinance, you're going through all the hoops to do that. And then you are where you are at the finish line. But with the HELOC, right, it's a revolving, like Keith was saying. So you can tap into it, pay it off, use it as more like an actual like credit card that you're using.
A lower interest rate credit card. Yeah. And one strategy would be, so you're going to have a first and a second, and say you bought a rental property and you're cash flowing a little bit each month. What would you do with that extra cash flow? Well, put it towards your HELOC, and because the rate may be a little bit higher, and every $1,000 you pay the HELOC down is an extra $1,000 you can borrow later. So it just keeps you more liquid and more opportunities. The more people buy and sell, you can actually make a lot of money in real estate if you find the right property. It's like if people buy and sell anything, coins or jewelry or
right,
art. Well, real estate's one of those things too. Cars, if you get a great deal on something, you might buy something that has instant equity right off the bat. So we can say find you a house that's worth 100 and you only have to pay 80. Well, that's a good deal.
Right.
So anyways, that's the tip of the iceberg on what we have to say about just like how to tap into your own personal residence for gaining some equity.
Thanks for watching. Hope you got a little bit of info on HELOCs, cash out, and second mortgages. We actually have a lot of videos on different financing options. So check out the rest of the videos. Make sure you like and subscribe. And thanks for checking us out.